Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Friday as we unpack the day and the week. I'm Andrew Gagan. Good to have you with us. So, looks as though we're going to finish flat for the day, but we are up for the week, and that is off the back also of clearly what we've seen for reporting season, the final week of reporting season. And we'll get some analysis of that in just a moment with Shane Oliver, but certainly a return to profit growth has been a feature of this half-yearly updates that we're seeing. Let's get to the themes of the day. Flat Friday, that's the way it's turning out, because every time I look at it, it's either green or then it's red. So it is pretty flat to end the week. Cutting block. Now that refers to Block, the stock. No, the company is cutting 40% of its workforce now. This is, again, all about AI and the efficiencies that it's bringing. Efficiencies, meaning job cuts. And reporting wrap. Yeah, we are wrapping those 4 weeks of reporting season. All right, let's just get to the sectors of the day, those that have moved then. Consumer staples, certainly led by Coles on the negative side. That's in stark contrast to what we saw with Woolies a couple of days ago, which had its best trading day on record. Coles going in the opposite direction. So it's the way it plays out for that, essentially what is a duopoly in the supermarket space. One's up, one's down. Although Woolies, I should say, up marginally there. Metcash also clearly in the retail space there, down as well, Elders and GrainCorp. Taking a look elsewhere, what we're seeing in tech, just a little mixed. Wisetech, that also got a boost off the back of announced job cuts there because of AI once again, and Xero among those tech stocks that have been sold off heavily, and seeing some buying opportunity there on the local index, Tech One also. And a check in on the gold space, they are back in vogue today. That seems to be daily variations that we're seeing. Yesterday we saw profit taking, now we're buying back into them. Let's catch up with the top corporate stories of the day. Now, Coles reporting a decline in its first half profit after one-off charges relating to the underpayment of wages. Plans to sack 40% of its workforce. That's about 4,000 people globally, as it restructures around artificial intelligence tools. Virgin Australia posting a 21% increase in first half underlying profit thanks to strong demand and its transformation program, increasing its bottom line. Harvey Norman tumbling to a 7-month low on half-year profit miss. PEXA rising to a 4-month high there after swinging to a half-year profit. Well, let's get to our stock of the day. It was Block. That is despite being a small cap special on the call today. Our experts, Luke Winchester from Mirror of the Capital and Richard Hemming from Under the Radar Report, took a look at Block.
What we're seeing, it's analogous to Wisetech, isn't it, Andrew? This kind of sugar hit that they're trying to get from cost cutting, that does indicate kind of a lack of, or a lack of ideas about growth. And certainly, companies try their first step is to buy back, and then the bigger call from management is these drastic cost cutting kind of initiatives. And if they work, they really work. But if they don't, they kind of gut the company and gut morale.
In general, and what you find in markets, is that things are fine as long as the share price is holding up. And that hasn't been the case for Block. It hasn't been the case for a few of these tech names like a Wisetech and a few others. And it's the declining share price, I think, that gives these CEOs and boards a bit of a kick up the bum, to go and address that cost base. And of course, AI is maybe not excuse is the right word, but it's a convenient sort of off ramp for the business. So I'll say a hold for the program. Watching with interest with all this stuff though, but I actually agree with Rich. I think the one to look for here, the beneficiaries, are probably those big ingrained enterprise businesses where we know, bureaucratic style enterprises. There's going to be a lot of fat in those cost bases that can come out, and AI looks like it'll be a genuine benefit for them. So hold on Block, but pretty bullish on the potential for AI and sort of making these businesses more efficient.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently. In a world of market noise and uncertainty, a disciplined approach to investing matters more than ever. Wealthy and Wise brings Team Invest's value investing playbook to Ausbiz. Unpack how the macro environment impacts business analysis.
I also think AI is going to accelerate that trend as well, and it is making the markets become a lot dumber than what they used to be, and it's getting away from the whole idea of allocating capital efficiency.
Put similar stocks head to head and make a call on which one wins.
And so from that point of view, my argument would be that as a value investor in the Australian market, if you wanted to, you could be fully diversified just owning Australian stocks, provided you were careful which stocks you picked.
Plus, ask the Team Invest experts to deep dive into a stock or topic of your choice. Just email us your questions. Live from 1 p.m. every Wednesday. Wealthy and Wise is your guide to value investing, powered by Team Invest.
The Last Call is brought to you by Australian Vintage Wines. Invest in the home of Australia's premium wine brands.
Welcome back. Well, let's get to the best and worst then in today's trade. Look at the best there, block. That is off the back of what is becoming a trend now, AI and efficiencies, and it's cutting some 40% of its workforce. So efficiencies translating into job losses. And we've seen that locally with Wisetech, as I mentioned there earlier. Those rare earth miners also in the green. PEXA with a positive result, and gold miners back in favour. Whereas those that have fallen, Coles, off the back of its results, a very different outcome to what we saw with Woolies a couple of days ago. Also in the retail space there, Harvey Norman under some pressure in terms of its outlook, and those some of those lithium stocks under pressure today as well. Now let's take a look at, in fact this is the small caps there. OneView Health up 30%, Petronas Resources also along with other resource stocks there. Whereas those that have fallen, Bapcor down 29%. That is off the back of a cap raise, so that's been significantly hit today. Sports Hero, we also featured that on the call today. All right, let's get to what is out overnight then, and we do have US construction spending for December that's been delayed. Also in terms of earnings, Berkshire Hathaway among those picking up the back line, if you like, of reporting season out of the States. Now, ahead next week, we get the ISM Manufacturing PMI out of the States. More commentary there from Michelle Bullock. We'll be speaking on Tuesday ahead of the next meeting of the RBA in March. Also, a quarterly read on GDP, the ADP non-farm payrolls report out of the States on Thursday, and a few more earnings, those laggards, to come. So, this is where we're finishing up for the day. In fact, finishing down for the day as I speak, as it was green last time I looked. So marginally lower on the day to be up around 1.2% on the S&P as ASX 200 for the week. Now, unfortunately, some technical issues has prevented us from bringing you commentary from our Friday regular, Shane Oliver from AMP. So I do apologise for that. That is the COB for the Friday and for the week. Thanks for joining us.